Cool. Hi, everyone. Everybody trade. That's why you are here. Okay, so my name is Heidi, and I'm a CEO of Boosto. So it's a decentralized app store, and I'm very happy to interview all those awesome people here on our panel. Those are professional traders, so we have a lot of questions. I will start with some basic and a little bit advanced questions later, but I will open to you guys later. We will have 10, so our panel will be 30 minutes. We'll have 10 minutes for Q&A if you guys have questions later. So we will have our panel to introduce themselves one by one.
Sure, this is Kevin, and I run Galois Capital, and we're basically a hedge fund that focuses primarily on the secondary market, so mostly OTC trading and algorithmic market making.
Ryan Rabaglia, head trading for Octagon Strategy. Octagon is Asia's largest digital asset brokerage, service the likes of family offices for hedge funds, fund of funds, and sort of making room for that institutional push.
My name is Jack Liu. I run Circle's Asia trading operations. So Circle Trade basically makes liquidity for large institutions, high net worth individuals in this crypto space. We've been servicing it for several years, and yeah.
Hello, my name is Satoshi. I'm one of the counterparts of them.
And it's a nice jacket as well.
That's right.
So Satoshi is very humble. He's one of the biggest lenders in crypto in the world, actually. So everybody borrows money from him.
He didn't want to say that.
He's very humble.
I just learned that today. I was like, if I have more crypto, can I lend it to him? They said, no. He lends the money to you. Oh, okay, cool. Do you like my shirt, by the way? Okay, so some simple questions. What is the difference between trade coins and trade stocks or currencies? Why you guys start as a trader?
Sure. So I think, there's maybe two major differences. I think for most other assets unlevered, there's a lot less volatility. So you have to be willing to, sort of shoulder the kind of risk that's only in crypto. And I think the other thing is that there's a lot of idiosyncratic, really small minutia that's a bit different. The fact that, you have to do settlements in a certain way rather than calling, your prime broker or talking to the custodian. You have to physically settle. So, there's a lot of nuances around, I think, security, and then also taking a look at fundamentally what is the coin doing, what kind of asset is it, what's its circulating supply, that sort of thing. So.
I think that's a pretty good overview. Otherwise, security and the speediness of settlements is completely different than a traditional market. Counterparty risk is massive, whereas in traditional space, there's really no worry for it from a PB perspective, and of course, volatility.
Keep it different. I think a lot of news sources when you trade crypto comes from very non-traditional places and at non-traditional times. So there's no quarterly earnings reports. In crypto, you kind of follow Twitter, Reddit, gets very esoteric from there. And those are things that happen to move markets. So it's a 24-hour business. It's hard to keep track of, and that can make their job harder. Creates opportunities also.
What was the question? The difference between...
Trade coins and trade stocks. Or do you have the experience trade other stuff?
Yeah. I mean, it's a new asset class, right? It's a new asset class that traditional space are trying to catch up. And well, I mean, I want to ask a few questions to you guys. Well, let's say there's a market making OTC, it's brokerage, but I want to ask some what's the inventory that you guys have?
No comment.
I think you're maybe asking not about the size of the inventory, but sort of how we manage our inventory.
Oh, yeah. Because, I mean, when it comes to lending, there's a lot of, I mean, it gives a lot of market impact for, calling or putting.
Do you want to explain your story?
Huh?
Do you want to explain the context of your question?
No, I mean, well.
You have the answer, I think.
Well, I mean, it depends, right? If you don't have inventory, how can we, lend it, or we can trust for them not to just make it a short position or just use it for market making or all the things, right? And I mean, there's no Kimberland here, but I think there's a lot of counterparts that start to get into like lending or borrowing as well. So just, you know, one of you.
And we're looking at that as a business opportunity, but we currently today don't offer lending.
Yeah, I know. I know.
Which way make more money? Like trade coins or trade stocks?
Well, I mean, I think all of us here, you know, we've made that choice. So
We don't have the choice.
we certainly think one way. Yeah.
All right. So 3 top must-known tips for trading Bitcoins and altcoins.
Yeah, I would say that, you know, you definitely want to pay attention to liquidity.
Okay.
You know, that's not something that, you know, you care about too much if you're doing small sizes in, let's say, FX. Maybe you could trade like 5 mil over interactive brokers with 1/5 of a basis point as a commission, and you don't even lift the best bidder offer. So I think in crypto, you know, it's a little bit different. Even trading something that's like a rank 50 on CoinMarketCap, trading 1 million of it instantaneously, you know, you're moving the price by yourself. So you have to be very conscious, I think, of the slippage that's involved. You know, I think, you know, I was talking to one of my friends who runs, you know, long-only crypto sort of VC. It's called a hedge fund, but it's, you know, really a VC. And, you know, they own a huge chunk of the circulating supply of a top 30 coin. And, you know, I was, you know, telling him, oh, yeah, you know, we can help you get out of that position if you want. You know, maybe it takes us 3 months. And I think, you know, he was a little bit taken back by just how long it would take to work that into the market. So I think, you know, just being very careful about liquidity. And it's the sort of thing that, you know, it only matters when, you know, it almost never matters until it matters. And then when it matters, it's the only thing that matters. So, you know, it's really the sort of thing, you have to be very careful. A lot of these funds, you know, they're marking to market all these gains, but when they mark to realize and they actually have a redemption request from their investors and their LPs, you know, maybe, you know, the actual returns aren't as good as they seem just marking on paper.
Other tips?
I don't know. I would say just investing in a Bitcoin or Ether. That's smart, but stay away from those.
Oh, really?
Yeah. Well, I don't know. Stay away from those, and most of the
Altcoins.
token lounge or those funds that manage your money to put it into. I mean, they don't even have a money, right? I mean, but I mean, definitely, there's like, you know, there's a bunch of coins that was coming up as in, you know, one of the major coins, like let's say like Definity or a Filecoin that would, you know, I mean, compete with Ethereum technology, but it has more synergy to, like, you know, like most of the top coins are going to scale up for sure, and we're going to absorb a lot of money from institutions soon. Like people say, like, you know, circles, like we say like we trade with institutions right now, but that's actually not true. There's a lot of like high frequency trading firm or big company that's trying to kind of start to getting in with a very small size or very low risk, and everybody said like the infrastructures are not set up, like such as custodies or, you know, clearinghouse and stuff, but that's already actually working in our space. We already have like, you know, common bank that we can settle like USD 24/7, you know, with no fee or with lender fees, and it's already working. So I think they just need well, some are waiting for regulators to you know, have an official announcement and stuff, but I think they just need a guts, right?
Guts.
Yeah. I mean, we just took a risk in the beginning. That's why you made money. That's it.
I think that's right on the institutional point. Today, you only see sort of fast-starting crypto funds that might be backed by institutions as LPs, kind of in the space. And maybe structurally, that's long-term going to be true, because if you look at traditional markets like stocks, when you do an IPO, the stock was already funded by institutional investors during the A, B, C, D, E rounds.
Yep.
And then in the IPO is underwritten by institutional investors. So of course, they're the ones going to be in this market. If you look at the total top holders of coins, it's like founders, teams, ICO investors from around the world, miners. So it's like the traditional institutions may be the next big amount of money coming into the space, like net new infusion, because they've been waiting to get involved. But the general economy in crypto that has just a lesser percentage of institutional involvement.
Wow. Ryan, you have in Brazil?
Well, I think the question started out a little bit differently. I think the difference between them is, from a trading standpoint, there's not much, to be honest, besides the volatility and liquidity and the listings that it's done on secondary markets. Otherwise, I mean, what Satoshi's saying, that's more of a long-term view of what's going to be around. But today, from a trading perspective, I don't see much of a difference besides liquidity and volatility, which, of course, are two very big factors. But overall, it's the same at its core.
Okay, so talk about liquidity. Where do you see most of the liquidity coming from, by geo and by demographic?
Yeah, Asia for sure, which is our backyard. You know, it's a retail-focused market. I think we've been saying that at a number of every panel I go to. Is we always say the same thing. It's a retail-focused market. Most of it does come from Asia. We know that the U.S. and Europe, okay, kick in their fair share, but overall, it's completely driven by Asia. And I'm not even talking about the pop to 20K. I mean, even today at lower levels, it still is. So you know, geographically, I'd say that's a pretty flat-out answer.
So when you talk about Asia, does it break down to different countries? Is China more?
It's the obvious
Korea?
ones. China is sort of, you know, everyone's weaning themselves off of China. But ultimately, there still is a lot of action there. I think a lot of people in the West don't know that, or they are told it and they don't believe it, but it's absolutely true that there is still a ton of activity there. But otherwise, it's pretty obvious. Korea runs everything. Japan as well, to some extent.
How about, Southeast Asia? No, not
Nothing.
really.
Zero. Yeah.
Zero. Wow.
Nothing of any relevance.
Well, I mean, I think for you know, people here, we are here to trade with institutions, and I'm already trading with institutions in Japan, but the just size are small, right, comparatively. Like I think Octagon definitely has a big flows of retail in terms of like Korea or China, but I think Korea, China has a big like a retail market, but it won't scale out to institutions. I mean, you know, due to a lot of regulatory reasons, but I mean, Japan or Singapore, Hong Kong, definitely, you know, we're pretty much ready. It just you know, it's time and well, you know, like I said, like they just need more kind of, you know, guts to getting into more. I mean, the first phase that the institutions get in was when the futures listed, but they made money through, you know, having a short position. So, but now, you know, they have to like buy back.
So to expand on that a little bit, are you saying that some of these institutional guys, maybe some prop shops, have been sort of like coming to you for borrowing, and then they use that to just you know, really short the market?
For market makers, they need to borrow, but there's a lot of institutions that kind of, I mean, look at Japan. There's a bunch of companies that join into like mining space. You know, I don't know what they want to do. Maybe they want to make Jihan money. They want to bring money to. Well, I don't know. Maybe you guys are close, so. But I mean, I don't think you can compete with mining. But I mean, they still like looking for a lot of, you know, space to kind of how they can, you know, make money. But I mean all of the institutions have an exchanges already in Japan, and most are regulated, like most are licensed. They're about to, you know, they just kind of need more time to, like, because regulators still has a few more steps to kind of clarify what the, you know, what coins that they can trade on. In Japan, there's only still like limited several coins that are kind of admitted as, you know, so-called like, you know, protocol token, like you know, not it's not categorized as securities and stuff. But well, yeah, I think I don't know. Like, what about Hong Kong? When it's going to
Hong Kong and Singapore, just where a lot of the companies from Korea and China sort of set up. So the money might be in Hong Kong, but the action is actually still, I think, in China, in Korea, and Japan. And I think you need a few ingredients for why these places have taken off first. Obviously, you have the investor speculative appetite, but and you need the regulatory clearance. But you also need really fast-moving technology platforms that are able to kind of, you know, when you add a token to an exchange, it's not no time type of investment. So those three markets are very strong in tech, and I would say that's probably why that market has grown instead of like Southeast Asia, for example.
Oh yeah, I think it's pretty much been said. I agree. A lot of the actions in Asia.
Coughing so much recently. Sorry, guys. So what are the top 3 trading platforms you guys recommend?
I think it depends on
Poloniex.
what you're trying to trade.
Poloniex.
Of course, OKCoin is a great place to trade.
Professional traders,
that-
like, they don't use what other people
Platforms.
use, right? Like,
Okay.
we are using some, I don't know.
Yeah, I mean, like for all of us up here,
You use bots.
So I think for all of us up here, we're all sort of OTC traders, so that's sort of where all the dark liquidity is. But in terms of platforms, futures for BitMEX I think is great. OKCoin is obviously great for futures and for spot trading, and Jack's alumni from there. I used to work at Kraken running the desk over there, so obviously I'm going to say Kraken. And then obviously Binance, wherever there's volume, wherever there's liquidity, a good UI UX, fast API. Fast matching engine, low fees. I think all those things matter.
But
Yeah.
sorry, Buttercoin as well, right?
Buttercoin, of course. Yeah.
I think what everybody sees is, I think, like
ANX.
Crypto Watch or Trade Block, those kind of things. I think everybody sees as kind of.
I think the whole industry is pretty still unsophisticated, even at a professional level. Professionals such as ourselves use exchanges just like mom and pop may log in.
We're trading through Skype, man.
Sure. Okay. Otherwise, there's a lot of shared characteristics amongst the professionals and unprofessional. That's just where the space is at.
That's a big difference. So question will be, do you guys use bots or do you build your own bots to trade?
What?
Bots, B-O-T.
Oh, we absolutely
Oh,
we have to do for hedging. Yes.
Oh, okay. Bots.
Yeah. I think bots are useful in the sense that so I think there's trade-offs here. So the bot is always going to be faster than you. So if you want to play like bidding games, where you're sort of jumping over the next order by a penny, that sort of thing. You see this a lot on different exchanges. You're never going to be able to do that by hand. So you do have to have a bot for that. I think, but for a lot of the smaller, more illiquid assets, I would say that maybe even manually trading is still better than the bots because the characteristics for it are so different that maybe having some understanding of what the actual asset is rather than some blanket algorithm would be a better way to go. And I would even say that if you look at, as an example, if you look at Binance, all the prices go down to 6 decimal places, if I remember correctly. So if the price of an asset is really low and already starts off at the 5th decimal place, then the 6th decimal place is a very high percentage of the actual price. So the tick size is very big as opposed to something with a greater per unit price. So the way that you would trade these might be a little bit different because all markets obey price time priority, but in some senses time priority matters more. In some senses price priority matters more. So how you would code up your bots would be a little bit different. It's sort of like in the traditional markets, if things are discretized down to a penny, that's a little bit different than when they were trading things based on an eighth of a dollar or 1/16th of a dollar.
Anybody also use bots?
He said it as good as anyone could have said it up here. I guess. Yeah, we build our own. That's all I really have to say.
Right. So as a trading the last year and this year, what's the difference and what can you see the next year will look like?
So I think trading last year was a lot more profitable for everybody. It was a bull market. This year, if you're running something more sort of market neutral, you're not really taking exposure on either side. And all for us, we're fairly market neutral, I would say, in our OTC activity. That profits are still good, but they've shrunk. I think, at least for us, they've definitely shrunk.
Shrunk by how much of the percentage, if you can say?
Probably proportional to how low the volumes have come compared to the volumes last year.
Mm-hmm.
Yeah, so I think last year, people who come to OTC desk are relatively institutions who are not retail. And so they came to the desk at an environment where there's a lot of market activity, which is great for spreads, but also there wasn't as many competitors set up as well. And the thing about crypto is that you have a lot more open sort of competition. So that's good for the user. That's good for that's probably going to be good for institutions to get involved as well, because you can imagine the fees can add up as well. So in both ways. So right now with the volume being lower, it's taking a hit to all our businesses, but it may make for a more liquid market when it comes back up.
Yeah, man. We share the total Japanese profit with you, Circle. Come on, man. Well, this year, I mean, a lot of it,
sure. Last year we traded with you. That's right.
Yeah. I mean, this year.
So Satoshi, he left me for Circle. See, now he's trading with them instead.
No. I mean, I mean, you guys got to do better now. There's a lot more serious competitors showing up. I mean, you know, because I don't trade with Circle or DRW more than those, you know, HFTs right now. They give us a way more tighter spreads than you guys, you know.
We don't know anything about that.
No, I know you do.
No,
I know
we
you
don't
do.
know
I know
anything
you
about
do.
that. We don't know anything about that.
Hey, when you're desperate, though,
What's
man,
an
you come
HFT?
knocking every time.
So this is a very retail-focused industry. Do you see this changing? If so, when?
Soon.
Soon.
Yeah.
Like,
Just borrow as much as possible and buy it up.
okay, so we're open to the to everyone. So do you guys have questions? You guys can shout it out, or do we have microphone to pass around? Anybody has questions?
Sure. Please.
The question is, you know, as a common guy who doesn't have deep pocket and has already missed out on the Bitcoin and doesn't have a broker dealer license, how can I participate in this OTC market as an independent broker?
Okay, so your question is, you do have a license. How can you participate in this?
I think you don't need. Well, I mean, you know, if you want to deal with like United States counterpart or Japanese counterpart, you do have to get regulated. But in terms of, you know, dealing with new, like, you know, other jurisdictions, I don't think. I mean, even in Hong Kong, I don't think you need to be regulated. Yeah. I mean,
Well, the answer is move somewhere that you don't need.
yeah.
And service counterparts from those countries as well. But most of Asia, you don't need it. Well, it's coming soon, though, of course, and the smarter companies such as ours are already in line to sort of be compliant with that. But as of today, you do not need it, in Hong Kong specifically.
Question. So Heidi asked the question, the difference between investing in coin and investing in stock. And I would think another difference is that coin investing is actually less regulated than stock.
Yeah.
Hence, there is a more chance of maybe market manipulation in coin market than, say, the stock market. Can you guys comment on that? Like something about schemes and other types of...
You want to repeat the question?
Sure. Yeah. So you know, the question is that this gentleman is saying that there might be other differences in coin markets versus stock markets, in that it's less regulated. So there might be more manipulation. So I totally agree with that. I think so, and especially in the cases where a lot of these smaller coins, the insiders hold a lot of the coin themselves, right? And in that sense, you know, if something goes wrong with their protocol, they're going to be the first to know, and they're going to be out of their position before you are, unless you're maybe like watching GitHub constantly, looking at the pull requests, you know, that sort of thing. So I would say that I wouldn't say that's outright manipulation, but you're certainly at an informational disadvantage. In terms of actual manipulation, I think those fears are a little bit overstated. You know, a lot of stuff has come out about Tether and this and that. I think what, you know, people don't realize is that, you know, if you're putting up real bids and offers in the book, you know, that's real money that you're putting at stake. And if the market doesn't follow you in whatever you're trying to do, you end up losing money. You know, if you take the example of Bitcoin Cash, when it pumped up to you know, 0.5 of a Bitcoin, largely that was driven by, you know, maybe some person who wanted to just push up the price and have it overtake Bitcoin, but it didn't end up happening. That person lost a lot of money, right? So I think those fears are a little bit overstated, but I totally agree with you that there's huge information asymmetries, especially in the smaller coins.
This is more of a trading question. Question about correlations. So if you look like last year, if you look at like cross correlations between different crypto assets, there was a lot of there was differences in terms of some things were less correlated to Bitcoin, and then more recently over the last like 6 months, we've seen a lot stronger correlations between all the altcoins. And then recently, like over the past few weeks, you've seen kind of negative correlation between Bitcoin and some of the altcoins. My question is, like, what do you guys see as like some of the really strong correlations in the overall crypto asset market, and why do you think sometimes the cross correlations can change so quickly?
Well, usually in the down market, the correlation
Repeat
goes
the
up.
question. repeat the question.
Repeat the question. The question was about correlation. What's changed? It's becoming more correlated the last 6 months. That's mostly because the market's coming down, where everyone sells to dollars. And then the other part of the question was how come some assets are negatively correlated to each other? Well, when they're like competing assets, like in some ways one fork versus another, like Bitcoin legacy fork and Bitcoin Cash, then they're going to be negatively correlated. That tends to happen when on that bull run for Bitcoin Cash. That's what happened with Bitcoin as well. And then ETH. Do you want to comment about ETH?
I think like there's a lending market in this space. So there's a lot of lending for Bitcoin or Bitcoin Cash or Ether, and then some are putting collateral as some other classes and other assets, right? So I think those will affect a lot of prices. But I think overall, like all the crypto goes to the same direction. I mean, you can see like Neo goes to upper, or above than the others, or but I think overall, it's going on in the same direction.
But I guess the interesting thing about this space is that it's not correlated, crypto as an asset class, to other asset classes. That's what makes it interesting from a portfolio theory perspective.
Yeah, that's right.
And that's why we expect institutions will eventually add crypto to their portfolio.
Yeah, but I think besides the forks and lending and whatnot, it's everything. When it gets bloody, everything gets bloody. I mean, I don't really see much diversification. I know people screaming from the rooftops, we have a diversified portfolio. I don't believe it. I mean, I really don't. I've maybe seen like one portfolio where I thought, okay, there could be something there, but otherwise everything just drags at the same time. Unless you're talking more of a micro view, which maybe that's what you're bringing up here, but sort of in the broader sense, everything is up or down together. Occasional outlier, but it's always event-driven, and it could just be some Reddit post, as Jack said, constantly checking the Twitter and whatnot. So sure, you could get some moves outside of the scope of this correlated nature, but otherwise, I think it just all sticks together at this point.
Yeah, I totally agree with what's said. Yeah.
With all the whales that you speak to, is there any talk of pushing Bitcoin down past 5,000, like 3,000?
I don't think people think of it that way. Yeah, I think we're sort of like our business is basically we're making the market. We don't have much of a directional opinion, and I think some people who do, they push the price up or down.
Let's ask Satoshi your directional.
Yeah. So I would say most of those LTC desks, right? They are market neutral for sure. But like people like me, or let's say like DRW too, like the big one, we're all long. We're all long. We're all buying up. Right now, it just needs to wait for more flows are coming in. And of course, there's always a position talk, right? If the one that has a short position, they say like you will go to 3,000 or 4,000, 5,000.
Talk your book is what you mean.
Yeah, everybody's
Traders
talking
their own
Yeah. But
everybody's talking their book.
Yeah, think about it. Like Bitcoin's being always stable. It goes up to X10, X100, and then goes to half, 1/3. That's very healthy. So we see this as very natural, very healthy. It's just kind of healthy correction. Right now, it's good time.
I think better question is there any whales or institutions
Yeah.
holding above 400?
Very.
That
Yeah. Well, I would say most of the institutions that talk big that doesn't have it, but the real sharks, they definitely have a large amount of Bitcoin, Ethereum inventory. Because if we don't have inventory, how can we trade? We can just get orders and just do pure brokerage by getting it from others, right? Like we have inventory, that's how we can deliver right away.
Yeah, and I just want to caveat, I'm actually personally very long on crypto, and I'm very bullish on the long term. I just meant, from that perspective, we're a market neutral firm, so we don't have direction there. But yeah, I personally have my own views. Obviously, I'm in the space and certainly committing time to it, so I'm definitely very bullish on the space.
Okay, we can take a last question. Okay, somebody have? We can take a last question. Please go ahead.
So I was just wondering, people keep saying that's like that's healthy for the market, for these corrections that happen. But to me, it seems like it's the opposite because when you have a lot of people who've lost a lot of money, as soon as there's like another bull run, they're going to sell off because they don't want to get caught where they were caught last
Well,
time.
yeah, I mean, of course, if you bought at end of last year, right? That definitely you will get hurt.
On credit.
Huh? Oh. I see.
I think when they say healthy, it means the asset class is not dead. It's like
Well, I mean, the one that use margin, that's their fault, right?
right.
I mean,
But if you want me to take it seriously for a second and plug one of Circle's projects, you will have stable coins coming out in the future so that people can benefit from the features of crypto without necessarily also be speculating. If you think about someone who's doing remittances or something like that, they don't necessarily want to be part of a healthy 60% correction.
so what's the difference between Circle? What was that Center? So what's the difference between a true USD or base coin or Tether?
Mechanism only, probably.
Yeah, there's three different mechanisms for stable coins. There's the algorithmic stable coins where you're trying to use math and crypto to keep it stable with no backing. And then there are asset-backed stable coins, like Tether, for example, and then you can have better backers. And what Circle is working on is a network. So similar to Visa, similar to SWIFT, where you have multiple issuers of dollar coins. So it's USD coin, not USD Circle. And we think that's going to be what the world is ready for in this period of adoption.
Yeah.
Fully asset-backed.
We'll see how it goes. We only deal with the one that it's working, or like DAI is working.
Yeah, I agree with Jack on this one. I think asset-backed stable coins are the way to go. And I think reducing counterparty risk there, to the extent that USDC and TUSD is safer than Tether, I think is a good thing. And we'd be very happy to trade stable coins with very low counterparty risk. So be very happy to trade USDC when it comes out.
Yeah, and also I think, going back to the healthy correction, sure, it doesn't look very healthy when things get wrecked. But at the same time, I think you have to look a little bit broader. It's more about the health of the entire industry, flushing out all that garbage that's out there still on all these other ICO projects and tokens and whatnot. Some of them sure carry some weight and are good projects and will develop into something meaningful. But I do believe when people say, it's a healthy correction, you're not talking about 70% losses.
No.
You're talking about.
I mean, think about it on an equity, right? Like we get 10%, 20%. That's like, whoa, very good performance. Do you know how much was Bitcoin and Ether at last year? Do you know? We know, right? It still went up like 10 times, or even Bitcoin at least like 5-6, right?
Yeah, one of the things about this technology is it allows really early stage, essentially, companies to be listed for everyone to participate in earlier. That has its advantages and it has disadvantages. So technically, if you were trading, Facebook stock back in 2004, first time you had an outage, maybe it went down 50% also. So that's just something that people have to get aware of. There are probably only a few coins that are more mature. And so institutions that we deal with really touch the large caps. And the speculative money, sort of, you can think of it as C-stage investors in crypto, are the retail guys who trade these tail tokens.
All right.
Yeah,
well, some great back and forth there. We'll leave it there.
Yeah, please. Yeah, so our time's up, and this type of question can give our panelists going forever. So please give our awesome panelists a round of applause. Thank you, guys.